Okay. Well, hello, everyone. Blessed evening to every one of you. Today, we are having a beautiful session. We are going to talk everything about mortgage. And this is Obapa, the Good Women's Club. We are here to inspire, to motivate, and to empower all of us to create value in our societies. And part of this value is everything about wellness for us. And wellness also comes with where you are going to sleep. So we are talking about everywhere, everything that has to do with your home, mortgage, how you balance your finances with your mortgage needs. And today we are having an expert with us. His name is Mr. Ali Sahili. I hope I'm mentioning it right.
Make it easy, Ali. Just Ali.
Okay, Mr. Ali, he's a certified independent mortgage advisor. He's a CIMAP certified and XRBS best mortgage advisor. He worked with Barbara in the Cambridgeshire Hub. And he has helped a lot of people with their property needs. And today he's here to help us understand everything about mortgage. Welcome, sir.
No, thank you very much. Thank you for having me, guys. Honestly, I appreciate it. If we can help anybody to put a roof above their head, that's my aim. Absolutely. This is not a job for me. It's a way of life, to be perfectly honest. I have met many friends through this job, through this beautiful job, and and I hope it's going to be a useful session for all of us.
Thank you.
I plan to be a bit more reactive rather than active today, if that's okay. I mean, obviously we'll give some information, but I'd rather to just cover your concerns and questions much more than me just talking, But anyway,
okay.
I'll leave it with you, my dear.
Thank you so much. Thank you for making time with us. So, ladies, your guest, Mr. Ali, your audience.
Sure.
So the floor is yours. Thank you.
I'll just tell you a little bit about myself. I mean, you mentioned a bit about me, and yes, I've been in finance for insurance and mortgages since 2005. And basically, it just has been a journey, from insurance into mortgages and into eventually being an independent broker, financial advisor. As I said, it's a way of life for me. It's beautiful. You help people along the way. And the joy that we get, from the start of the journey. I call it always journey for a client, especially first-time buyers. People who either live with their parents or they just got together, they rent somewhere, and they have that desire and hope to, have a roof above their head. I call that journey. I had that journey myself back in 1999, 1998, when I had my journey to buy my first flat in London. It's something, an experience that nobody will forget, buying your first property. So from there to, as the topic of the session says, to people who want to buy their second one as an investment, or the third one, or the fifth one, or I've got a client now over 20, 25, 30 properties, and they're still coming to me for more properties. And yeah, it's a journey for anybody, but especially for first-time buyers. And the market has tightened so much now in terms of products and in terms of affordability, especially affordability, has made it much more difficult for people to get to property ladder. So I'm going to stop talking. So I want to leave it with you guys. And if anybody got a question, please, fire it at me, and let me know what I can give you. I'll give it back to the host. I don't know if it's Barbara or yourself, my dear, but anyway. I'll wait.
Okay. Hello, please. Does anyone have any question concerning mortgage for Mr. Ali?
Hello, I have a question, please, if you don't mind.
Sure.
Okay.
Hello, Mr. Ali. I'm looking into buying the property where I live in. I live in a property housing association in Manchester.
Okay.
And at the moment, I'm waiting to get a new valuation, because the first one I got has run out because of COVID, so I couldn't get a mortgage.
Okay.
I have little knowledge about mortgage because I used to work, help those who are in financial difficulties.
Okay.
In the bank. I work with a financial institution myself. So what I wanted to check is, because I'm on a family visa and I'm due to renew another one in December, do you think, because obviously, you know, some mortgage advisor, they will say, oh, it's okay. And then after you pay them, and then they, you know, you won't get anything. So I just want to check that.
No problem. And that's a very, very good point that you raised, because there are many mortgage brokers out there that, you know, they work differently. The way I work is I don't charge a customer until I get them a mortgage. And I think a genuine mortgage advisor, that's what they do, mortgage broker. They don't overpromise, they're realistic, and, you know, they don't charge people at the beginning. But it is the market that the FCA, our regulator, allows that. You know, we are allowed to charge people at the point of application. So you give me the evidence, the documents that I need, bank statement, pay slips, and then I can charge you at that point. And now whether that application goes ahead or not, a lot of, you know, brokers, they work in that way, especially estate agents. They charge people up to £800 to do the application. Now, whether you get the property at the end of that application or not, they don't care. The job is to just, you know, do the application. That's not the format that I work. And, you know, I've got, you know, similar kind of, you know, bunch of people, you know, colleagues that they work in the same way, that we don't charge a client until we get a mortgage. Now, coming just to your circumstances, because this is a group session, I don't want to ask a lot of individual questions about you and your circumstances. But you did mention yourself that you want to buy the property from housing association. Normally, this falls under either right to buy or right to acquire. Which one is that? Which one you applying?
Right to acquire.
Okay, so with the right to acquire, they will give you certain amount of discount. I'll just say to you as an example, they come and value your house for 100,000. They'll tell you, we give you £10,000 discount. And then they'll come and value the property. They give you an offer. And I think normally that offer is valid for 90 days for you to go and get a mortgage offer, that your offer is ready, and then use that £10,000 or whatever money you've got in the background to use it as a deposit and buy that property. Okay. Now, coming back to your circumstances, I need to ask you a few things to answer your question, I'm afraid. Okay. Now, one, you said you are on the spouse visa, I believe. Yeah, spouse visa, is it?
Family visa. Yeah.
Okay. And how long is that visa? Is it a limited visa at the moment?
Well, at the moment it's limited, and I'm due to get another 2.5 years.
Okay, majority of lenders, when it comes to limited visa, okay, they are asking for the clients or foreign nationals, in a way, to put more deposit than a normal British person or somebody who is a foreign national, but they got an indefinite leave to remain. So indefinite leave to remain is as good as a British passport, okay? Now, in your case, as I said to you, majority, I'll give you an example. For example, NatWest will cap it at 70%. So they basically, they want you to put 30% deposit as a whole, and then they will give you 70% mortgage, okay? So that's how it works. Now, can you tell me how much roughly they valued your property and how much was the discount?
Okay, the last value was 100,000, like you rightly said, and then you give 10%, which is 10,000.
It was literally that. It was 100,000.
Exactly, that was what I was saying. Exactly. So your example was quite right.
Wow, I'm not a talisman, but I can't believe that I'm that accurate. Okay, so in your case, so your discount with the bank is with the housing association is 10%. You are on limited visa. I think I can get you a lender that will accept this, although you are on a limited visa. And can you put any deposit yourself as well? Any saving that you got that you can put it forward for this?
Not at the moment, because
I think I've got one or two lenders you know, in mind for you. But obviously, when this session finished, please get my details from Barbara. You can get in touch with me, and I can tell you how it works. Now, with regard to basically the whole process, you need a solicitor, obviously, to buy the property. And if you are after a £90,000 mortgage, then that depends on your income. You know, lenders normally give 4 to 4.5 times of your salary for the mortgage, and depending on your age as well. These are the stuff that I can look into, you know, after, you know, obviously this session. You can talk to me individually and I can help you with that, no problem. Do you have any other questions, my dear?
I think basically that's just what, because I have broad knowledge about mortgage anyway. Like I said, I work in that sector, so
very good. Yeah, it's just, it's in your case, it's just about is it going to be a difficult mortgage? I have to say, because in majority of lenders, they won't give you up to 90%. The likes of NatWest, Nationwide, you know, Santander, the cream, they won't give you up to 90. But I think I have to go to 1 or 2 specialized lenders that they will allow you up to 90% if your credit rating is excellent. They will allow that. But especially because you're on a family visa, so they know that it's going to be renewed. But yeah, that's absolutely possible. When obviously you need to get your offer from the council first, and then start the process of, you know, getting a mortgage. Okay.
All right. Cheers. Thank you so much, Mr.
My
Ali.
pleasure. All the best.
Yeah.
Hello, please. Does anyone else have any questions for Mr. Ali?
Yeah, this is JD. I do have a question. And just
Okay,
like
go on.
thank you. Is that okay, Ali?
Sure,
now,
of course.
Thank you. Just like the other lady, this question is not necessarily for myself now, but for people who are looking to get mortgage for the first time. I'm looking for that, say maybe for my daughter. I can advise my daughter because I've been in mortgage, you know, full cycle and the journey for a long time myself as my career. However, say somebody wanted to start a mortgage for the first time in their life, maybe 18, 20-year-old or 21-year-old. What are the kind of things they need to start putting in place now?
Hello, Jade.
Yes.
Yeah, I mean, sorry, you finish your question, Jade?
No, I haven't even started my question.
Yeah, go on, carry on.
Sorry. Okay. Say they wanted to start a mortgage for the first time. What are the kind of things that they need to start doing now? Say maybe they want that in the next 2 years. Is the kind of savings they need to start putting aside? Is it the kind of, you know, watching, you know, their credit check or their credit score and things like that? What should they be doing? That's the question.
No, that's fine. I mean, I think you touched it a bit yourself. I mean, I'd advise them to live at home with parents, first of all. Because if you go and rent somewhere, then you have to put, you know, your money towards the rent and council tax and everything else. Whatever you earn is going to disappear, you know, simple as that. So the first thing I'll tell them is live with your parents, so you're not paying the rent. The government is still doing the Help to Buy ISA. That's a very good way of, you know, saving money. There is obviously limits on it. As far as I know, I don't think you can save more than £250. I might be wrong because these figures fluctuates, goes up and down. So definitely I ask them to approach a bank, maybe their own bank, and open an ISA, Help to Buy ISA, because obviously it's good that you save money in there, and also you will get a bonus of 25% when you want to buy a property. So every little help really at the end of the day. If you can save £3,000 a year, and the government will give you another, you know, 25% bonus on top of that, in a couple of years, in 2-3 years time, it amounts to a reasonable figure. The second thing is I advise them basically if they're doing if you get an overtime, for example, overdraft from your bank, be careful with that. Normally lenders, they don't like to see people using their overdraft. And I've seen with youngsters, they don't mind that. You know, they've got £500, for example, overdraft from their bank, and they keep going into it. They're touching up to 490, you know, 495. The bank doesn't like it. The bank doesn't want to see people using their overdraft on a regular basis. If you dip into your overdraft and then come out, I mean, like, for example, if you're paying your, I don't know, let's say mobile phone, and then one you know, month you go £30 into your overdraft, but when you get paid you go back into credit. That's something that is good. But if you keep using your overdraft, that's not a good thing. One other thing as well is I hear from a lot of people, oh, I don't have actually credit. Oh, I don't have a loan. I don't have a credit card. If I get a credit card, is it good for me? So I'm going to build up my credit, history. I say this is a double-edged sword. It can go for you, it can go against you. I mean, I myself, I've done mortgages for people who just turned 18, just turned literally week after their birthday. I've done a mortgage for them. They didn't have any credit card. They didn't have any loan. They didn't have, nothing. They didn't have any credit. Mortgage is basically is a secured lending. It's not like a loan, for example, unsecured, when you go to the bank and get 25,000, 10,000 pound, I don't know, 15,000 pound loan to buy a car. It is not like that. The way the bank credit score you, because the security, it is actually safe, and basically they have got the first charge on the property, and so they got the security as their guarantee. The way they credit score people is much more lenient than even a loan. So my answer to that is, if somebody wants to, for example, build up their credit history and been advised, oh, it's good to have a credit card, fine, go and have a credit card. That's not a problem at all. Pay your petrol, your lunches on the credit card, but the main thing is to make sure that you do not miss your payment on that credit card. So I always say to people, always put it on full payment, direct debit, full payment. If a full amount comes out of your account every month. So if you spend £200, by the end of the month, you got that money in your bank account, and that will cover your credit card. Or if you don't want to do that, at least put it on minimum payment. So at least the minimum payment, it goes to your credit card, and you will not miss any payment, because believe you me, it's a lot easy to do that, especially if you're teenager, I don't know, maybe 17, 18, 20, and then you got a lot going on in your life. The last thing is you want to think about your credit card bill, or your bank balance. So you need to basically be a bit more mature to use these items. But my advice is, do not use credit card if you are early teens, early 20s, or you just turn 18 and you want to build up a credit history, if you're not responsible, because that will go against you. If you miss one credit card payment for 6 months, the bank is not going to give you any mortgage. So is that good for you? So this is where I'm coming from, Jade. So is it good for me to go and get a credit card to build my credit history, but I forget about my bill payment, credit card payment, so I've got a missed payment on my credit card, and then you come to Ali, and then literally I see this day in, day out, that people come to me, oh, the credit, I say to them, obviously within the fact fund, any problem with your credit history? No, everything's okay, everything's fine. Do the applications decline? I'll tell them to give me their credit history. Yes, they had a PayPal credit card 2 months ago, he forgot to pay it. It's as simple as that. So I suggest, if your daughter is responsible, definitely ask them to have a credit card, but as I said, put them on minimum payment or credit or full payment every month. Make sure the bank balance is there to cover the credit card, and make sure the bank balance is there for them not to use the overdraft. And obviously, I'm just touching again, the first thing, make sure that the spare money that they have, first of all, open an ISA account, Help to Buy, and even the surplus can go to a second saving account, and this will help for them to obviously build up their savings. Okay.
Fantastic. Thanks very much. Do you mind if I ask one more question on the
sure.
offset of what you said? Okay. So say, and again, so they're living with their parents at the moment, or something like that. How would they show, say, maybe proof of repayment ability when the mortgage is drawn? I suppose that's one of the things that you look for, isn't it? So how can they build that up? Do they build that up by maybe
that's
giving their
purely,
parents
it
right?
doesn't, you don't need to have a history of paying a loan for £300 a month. You don't need that. Okay. How it works is, as I said to you right at the beginning, the lenders are very, very keen about doing a very, very thorough affordability. So we do that checks already. So hence the income is a lot more important than before. So we look at that income. We look at what kind of liabilities is against that person. What basically those people got as as debts. Like, for example, majority of youngsters, they got the, student loan, which basically we will take that into account when we do a mortgage. So now when we do the affordability, we will establish how much that person can get, and that will go through the, our calculators easily. So that's something that we will look into it. So I don't think your daughter or yourself, you need to be too worried about that. As long as their credit history is good, we can establish basically how much they can borrow and how much they can pay every month. We will actually advise that to our clients, how long to take the mortgage for and what term is available. And obviously the maximum loan is always sealed by the lender. It is not something that I can up or down, or even the bank itself. Even when I day in, day out, when I speak to underwriters from the banks, it's not something that they can establish. It is all done through a calculator by individual banks, and whatever figure, magic figure they give us, we have to, stick to that. Is our Bible. I don't know if I've answered your questions, Jay.
You have. Thanks very much.
No,
I was just asking all these questions on behalf of people who may be shy or
problem.
who don't
That's
know where to
fine.
start
That's no
those
problem. That's
questions.
no.
So I'll ask if no one else have any question, I'm going to ask one more. All right.
Sure.
So
Sure.
now moving on to say maybe buy to let. All right.
Okay.
The situation. So what I suppose is going to be different from, like your private residence and all that. What's it about?
Okay. I always say, people talk to me about commercial properties or about buy-to-let properties. I always tell them 3 steps. Step 1, step 2, step 3. Okay. Step 1 for people is to buy a residential home. You cannot come to me and say to me, Ali, I want to buy a buy-to-let property and I'm a first-time buyer. You can't do that. The lender wants you to have some experience about a mortgage and paying a mortgage. So that's always the case. So the step 1 is a first-time buyer, somebody who wants to buy the first, home, to have a roof, over the head. That's the first thing. So assuming that you have got a mortgage already, or you own a house outright from inheritance or whatever reasons, your gift or whatever, and at least you own that property for 12 months. So if you have got that, then you can go down the route of buy-to-let. So that's the second step. So the step 2 is buy-to-let, is where you come to us for investment. So you want to buy a buy-to-let property. And normally speaking now, with today's market, to get a good, decent rate, you need to have 25% deposit. So you got a house that you live in, you're thinking of buying another one to let out, that's fine. As long as you own that first house for 12 months, you come to somebody like me, as long as, again, you've got 25% deposit. So going back to the example of the first lady, if the property is £100,000, so you need to put £25,000 yourself as a deposit, and I can get a mortgage of 75%, which is £75,000. And then we can buy that. That would go down the route of buy-to-let. You buy that property as an investment, you put a tenant in there. So the tenants will pay you the money, and then you can pay the mortgage off. That's the step 2. The step 3 is somebody who wants to buy commercial property. What commercial property is like, for example, a shop, which some flats on, over the top, or you just want to buy an investment property, which is just a shop, without any, residential on top. So again, this one, if somebody come to me and say, look, Ali, let's say, there is a restaurant for sale, with some spaces upstairs. I want to buy this. I want to have it. I don't let it out. I've got clients. I've got, for example, I'll give you a, live example. I've got somebody who come to me and want to buy a pharmacy. So he wants to buy a pharmacy. The pharmacy is downstairs on the ground floor, and he's got a flat upstairs. So this person, for me to do a mortgage for him on this commercial property, now the lender goes back again and say, okay, if you want a commercial property, you need to have experience of buy-to-let, not residential, buy-to-let. So you need to have a buy-to-let property for at least 12 months. So you got the experience of buy-to-let property, a tenant in the property that pays you a rent, and then you get that rent to pay the mortgage. Now, if you got, so you see now why I'm saying 3 steps, because if you come to me for commercial property, and if you haven't got a buy-to-let property, you can't do that. Or even though you own your own house. So if you own your own house and then you want to go and buy a shop, You can't do that because the lender will say you have to go and get a buy-to-let residential first. Have that for 12 months. And then again, just going backward now, if somebody come and say to me, Ali, I want to have a buy-to-let property to let it out, I'm going to tell him, no, you need to have residential first for 12 months. You see where I'm coming from? So the lenders want to make sure people are well educated and well tested and tried before they go down the route of commercial. And obviously the buy-to-let, and obviously the first step was the residential. Okay.
Very good. Thank you so much for that. Thank you so much. I think you covered pretty much everything. I will stop now unless anyone has any other questions. Please go ahead.
Oh, okay. Please, does anyone have any questions?
Pretty much in the back.
Okay. If
does anyone have any question for Mr. Lee?
Okay, I'll cover a couple of
okay,
what people
so please,
thinking.
You can have the floor.
I covered a couple of more things that we haven't discussed. Okay, I talked about the residential property, first-time buyers. Okay, we talked about the buy-to-let. We talked about the commercials. Okay, so there's a couple of things here to discuss as well. Is what if somebody's got a residential home already? I'm living in my house with my family, and I've got a an old lady, old mom, that I want to buy property for her. So, or a family member, or in case of Jade, Jade, if you decided to buy a property for your daughter yourself, we call that as a second residential. And I almost say to that, impossible mortgage, because of the affordability, that the way it works, it is so difficult for you to get a residential mortgage for yourself and then go to the bank and say, actually, I want to buy another one, which is a residential, is not a buy-to-let, is not investment. I want to buy it for my daughter, or for whatever reason, that you don't want to buy that property for your own daughter. For example, if somebody's got, as I said, old parents or disabled children that they can't buy the property themselves. Now, I say to that, I'm just touching it because it's good to have this information. Your salary needs to be over 80 to 100,000 pounds, above that. If your salary is under, 70, 80,000 pounds, I say don't come and talk to somebody like Ali if you want to buy a second residential. That income has to be a lot more than normal, salaries now, which is 40, 50, whatever, So that's one. The second thing is, I think, as it was in the topic, and Barbara touched it as well. What about the second buy-to-let, or the third buy-to-let, or the fourth buy-to-let? So you got a house you live yourself, and then you want to buy a buy-to-let property, and you've done it. You've got one already, and you know that the second one is as simple as that. So you go to somebody like me, and you buy another one, your second one, and your third one. But just the market has changed now. If you have got more than 4 properties as a buy-to-let investment, they call you a portfolio landlord. Now you're not an accidental landlord, or just somebody who got 1 or 2 properties, and he had a little bit of saving, so they've gone and bought a couple of properties, and they're letting it out. No, so basically we could say professional landlord. Anything over 4 would become a professional landlord. And in that manner, because now your portfolio is 4 or 5 or 6, normally we have to go to specialized lenders for these sort of mortgages, and they're a bit more expensive as well. The reason why is because the bank knows that you're a professional landlord, you're doing obviously for living, and hence your 4th and 5th and 6th mortgage is going to be, the rates are going to be more expensive than your 1st and 2nd and 3rd, because you are a professional landlord. As simple as that. So that's something to know. If some of you already got a portfolio of 4 or 5 or 2 or 3, and you want to expand that. So that's something that to bear in mind. And one other thing as well is, you have to obviously, as I've mentioned, each property that you go for, buy-to-let, you need to have that 20 or 25% deposit. So that's where that money going to come from. Again, that's something that people raise differently, through gifts, through family investments, through lifetime savings, whatever, the people do that. So that's something, and I don't know if any of you are in that category of having a few properties. So that's something that I can help as well. I've got many clients that they are portfolio landlords, and obviously they do that. Then one last thing I want to tell you, I hope, I'm not bombarding you with a lot of information. Normally, these day and age, because of the tax changes, I'm not a tax advisor, by the way, I'm just a financial advisor, but we can happily say this, that because of the tax changes in the buy-to-let market, from this year, nobody can almost take any expenses back in terms of finance from the mortgage. Hence, a lot of people now, instead of buying properties in their own name, they buy it in a limited company's name. So Ali goes and set up a limited company, Ali Investment Limited, for example, and I buy the property under that limited company. Because now it is a source of business, then you can claim majority of the stuff back like before. And this is an avenue, again, a lot of people going down these avenues. And the bank, again, pinpoint, obviously recognize this is a way for them make more money. So when you set up a limited company to buy your first or second, even or third, buy-to-let property, on average, to set up a property and buy it on the limited company is, I say, about 20 to 30% more expensive than buying under your own name. And people are pushed to do that because you can't get all your expenses back under your individual name. So hence they're buying it on the limited company. So I'll stop there. I just don't want to bombard you with too much information. But I'm happy to take any more questions if anybody got any.
Hi, Ali.
Any more questions, please? Okay.
Good evening.
Hello, how are you?
I'm good. Thanks for sharing.
Hello, good evening.
Good evening. Sorry, yeah, the man, don't worry. I want to ask, what if I buy the property in my name, then sell it to my company? Since it will be cheaper for me to buy in my name. So maybe 3 or 4 months after buying, I sell it to my company.
What's the purpose of that? Why would you do
that? It could be a second property or commercial buy-to-let.
Explain to me more, because let's say you've done that. Let's say you have gone and bought a property under your name. I presume you're talking about buy-to-let, yeah?
Yeah.
Okay, so you bought a property already for yourself on the buy-to-let and you've paid the stamp duty. You have to pay about I don't know, they keep changing it, but I think up to under £25,000. At the moment, it's 3%. So you paid a stamp duty, okay, about £3,000-4,000. You said you pay the solicitor another maybe £1,500. Somebody like me, you paid £300 to £500. So almost you paid about £5,000, okay, for a house, again, property of £100,000. Now it is in Allah's name, so you're letting it out. Why would you put it in the company's name now?
I just took cue from what you said, that sometimes it's cheaper to buy in your name rather than buying in the...
No. I think you misunderstood me. No, what I was saying was, when you buy a property in your name, okay, in your individual name, let's say normally the rates are about 2%, yeah?
Okay.
And that mortgage, normally you get a free survey. You don't have to pay £400-500 for survey. You get a good rate, and you don't have to pay any more lender fee. Lender will charge you as well a fee, but you don't have to, because it's in your name, okay? So now you bought it in your own name, and you paid that £5,000 we discussed, okay? Now, if you want to put this property in the limited company's name, you're selling it to the limited company. You have to pay stamp duty again, okay? And then you again have to go to a specialized lenders to get, instead of 2%, 3.5%. And again, you have to pay the lender fee. So why would you do it that way? You buy it in the company name right from then, not put it in your name and then change it, because it doesn't matter. Because at any point you change it to a limited company, you have to go through that process of paying more. But mind you, your question is not that irrelevant, because a lot of people actually doing it now. Like, for example, I've got a client that has got 2 properties in his name already. And then he said, because he knows the tax changes now and he can't claim any expenses on those 2 properties, he bought his 3rd property on the limited company, okay? So he's got 1 in limited company, just bought it today, and then he got 2 from 2 years ago. Some of these people, they take the bullet and they sell the property from their own individual name to the company name. And they do that, and they pay the stamp duty, and they pay the solicitor. They do that. Why? Because they know in long term, they can now claim back their expenses. You know, they can claim back the interest. They can claim back expenses. So they take the bullet and they may charge, you know, they may pay £5,000 or £6,000 each property from individual name to go to limited company in their own name. But in 3-4 years time, they get that money back in, you know, tax saving. But they don't do it the way you said, because it just doesn't make sense. And it's just extra cost for you. Okay.
Okay. Thank you.
No, my pleasure.
Okay. Does anyone have any question? Last question.
I think I've
If
given them
nobody
too much
has any
information.
question.
But please,
Yes, if nobody has any questions,
share
thank
my
you.
telephone
Okay.
number. Do share my details with people. I've already said to Barbara, that's okay. People, obviously not
Sure.
today, but not today and tomorrow, but Monday, Tuesday, anytime between 9 to 5. Please pop me an email. Please give me a call if you've got anything to say. If you want to message me on WhatsApp, I'm very, very active on WhatsApp and on my email as well. So if you've got any question, any inquiry, anything more individual, any plan or desire you've got for the next 3 to 5 years, please call me, talk to me, and I will do my best to help you achieve your, you know, goals. Absolutely.
Thank you. Thank you so very much. And thank you all for making it to today's session. It's been very interactive and educative. And Ali's number is in the chat. And also there's a link of Obapa also in the chat. So you can see we are doing a lot of things, helping a lot of people create value and adding value to themselves. Thank you all for making it, and have a blessed weekend. Bye-bye. Thank you, sir. Thank you so much.
Have a great
Bless you.
night. Thank you. Bye-bye.
Thank you. Bye-bye.